Good morning, folks. This is Pasindu Pereira again from first time from Forex Compass in English. So, for the past couple of months, I have been doing content in Sinhala for Sri Lankans, and I thought of sharing my knowledge in English with the global community. So, giving a brief, I'm talking about the fundamental analysis and how can we trade in forex markets, especially in CFDs, using fundamentals without technical analysis. I'm not criticizing any technical concept, ICT, SMC, whatever. I am mainly focusing my trades aligned with the fundamental analysis. So, without further ado, let's hop into today's video. So today, basically, I will be doing a small introduction, not an introduction. So I will be giving an outlook about the current market situation and what opportunities and what maybe risks that we should be aware of with the current sentiments. As you all know, there is a war happening around in the world at the moment. So I will be talking about my opinion. So this is not a financial advice. This is just only for educational purpose, for those who are interested in fundamental and geopolitical analysis that is related to forex markets. So major shout out to Arno. This platform I am using is Capital Edge, so you can also use this data dashboard. For fundamental traders, data is the most important thing. So if you were to purchase a kind of institutional level data source, it would be really expensive. For example, London, the Refinitiv or the data source from London Stock LSEG and Bloomberg Terminal, they are very expensive, and I think this is kind of a substitution, not 100%, but up to a certain extent, this is the best platform you can ever. This is kind of very affordable for retail traders, just $49 per month. So just check it out. This is very, very, very useful for this for retail fundamental traders. Yeah, it's a small shout out because this is not a promotional video. This is kind of just giving a shout out because I'm using this platform very often. So I thought of giving a shout out for Arno for this amazing product. Okay, let's move forward. So usually what I do first is check the risk sentiment. This is a very, very good sentiment model based on many features. So it gives us very simple output. So there's no rocket science in this, and when understanding this in the current sentiment. So here the current risk sentiment is kind of neutral. So let's just look out the key macro drivers. First, geopolitical tension and the Middle East conflicts. Escalating geopolitical tensions in the Middle East, particularly involving. So this is basically about the war happening in the Middle East, Israel-US joint attack on Iran. Talking about Iran, so we don't see any clear signs of de-escalating this war scenario. So my personal takeaway, making this video very simple. So my personal takeaway in this, takeaway from this scenario is I will continue seeing oil prices getting higher. So I initially I have been long on crude oil since January. So I missed this entire up movement. It was like in a sudden, with the market opens, like it was a 50% or more than 50% up movement. Yeah, it's like, I think from the bottom it's something around 50%. It's like something around like nearly 50% up movement. So I don't think with the current scenario there will be there's no any clue or any hint of easing the war. Both the parties like Iran, US, Iran, Israel, and Iran are like, they all are not planning to end this war. So with that context, I think oil prices will keep continuing increasing. But the thing is, if at any point, if kind of if we see kind of easing or a peace talk or whatever, any point that would give the market participants a sense that the war is going to end, then definitely we will see the oil prices drastically dropping down. Until that point, until we receive such a news or such a kind of a hint, I don't see any reason to short on crude oil. So after the recent decent pullback, I was able to get into a oil trade. So it was actually, my entry was here. So I'm still holding this trade at break even, so I'm risk free on this trade. So this is just basically on fundamentals only. Geopolitical and tensions, based on geopolitical tensions, is also part of fundamental analysis. So there I haven't used any technical concepts, the typical retail technical concepts. So just based on the fundamentals, I have used a quite wide stop loss compared to the retail technical traders trade setups. So I hope this will continue and back until like around up to this fair value cap. But there are some risks for this trade. Now for the yesterday, since yesterday and day before yesterday, we started seeing many countries releasing their oil reserves to control the oil prices, which is not a good sign for this oil trade. But from an economic perspective, this oil price movement is a really big disaster for the global economy. Like I will not make this complex, like making the bringing this simple scenario out. When the oil prices rise, simply the global inflation will start to increase. Sorry. When the oil, like since crude oil then and the outputs of crude oil, refined oil, are major resources of like almost all the industries in the world. When one of the price of a resource increase, that means the cost of the end product or the end service will also increase, which will ultimately result in increasing in the inflation. So let me show you some interesting points. Here we go. So RBA now, as compared to the last week, interest rate hike probability for March 17th, interest rate decision was 16.1%. Like 16.1% of the market participants were expecting rate hikes, while 83.9, almost 84% of the market participants were expecting a hold rate decision to be hold. But now it has shifted to 81.9% because let me show you guys. As we have seen, Australia unemployment data was quite good, like starting from September 30th last year, 2025, it was 4.5, and it was dropped to 4.3 in November, and it was 4.1 in January, which is a good sign for the labor market of Australia. And you see there's good progress, like not good but better progress in the GDP also. With this scenario, with these 2 points, right, we were seeing higher inflations. So like let me take this back to Reserve Bank of Australia. So the main mandate of Reserve Bank of Australia, the goals are to ensure currency stability, maintain full employment, and promote economic prosperity and welfare of Australians. So current stability and generally recognized through the RBA's inflation target is 2 to 3%. At the moment, RBA is not even close to this inflation target. It's like 3.8. So at the moment, if the labor market is doing fine, GTB is also showing some progress, but inflation is not cooling down, and with this oil price surge, definitely the inflation will start to increase. So with these kind of things, we can't see that RBA would start a rate cutting cycle very soon. So with that sentiment, markets have started to pricing Australia like another rate hike in the next coming week for Australian interest rate decision. So with that, I also got an opportunity to catch a long trade in Australian dollar CHF. I booked my profit. I closed that entire trade setup like it was a 76 pips. 2 days, if I'm not mistaken. Yeah, 2 days trade. So I closed this trade yesterday, the day before yesterday. Still, my thoughts on AUD is still bullish, but there's a concern. What is the concern? It's again back comes to the oil prices. As you all know, right? As you all know, let me show. Strait of Hormuz, right, is one of the main oil shipment checkpoint, right? 20% of the world oil necessity is, or oil supply is sent through Strait of Hormuz. Now it's totally closed, and which means 20.9 million barrels per day is not injected to the global markets, which means especially 84% of the crude oil that moves through the Strait of Hormuz goes to Asia, China, India, South Korea markets, which is not a good sign, right? If this continues, main thing will China will have to pay extra money for crude oil, which will affect the Chinese GDP, Chinese manufacturing sector, Chinese service sector, everything, and which will indirectly impact negatively on Australia also, because as you all know, it's a fundamentally well-known point. Australia's main trade partner is China, right? I can show you that also with data. I'm using free resources for such, so that anyone can use this. Australia, right? When we go down here, right, here we go. Right, so here you can see 35% of the Australia's exports are sent to China. Like for one country, like 35%. This is the 2024 data. Maybe now it has increased. So if something happens, negative happens or positive happens in China, it will directly affect Australia. So keep that in mind. We call these kind of points trade partnerships. So as fundamental traders, we should always keep these points in mind also. So if this war escalates for another couple of weeks, it will definitely not become good for Australia, not only for Australia, but also for New Zealand dollars. So as we know, there are three main COMDOL currencies. COMDOL currencies means commodity-based currencies: Canada, Australia, and New Zealand. Main three. So this war scenario is kind of positive for Canada, because Canada is a country which survives basically only from crude oil. This is very basic stuff I'm talking about. Nothing difficult, not rocket science. Canada, where is Canada? China, Australia, Canada, here we go. Canada's exports products, like the 20% of their exports products are crude oil, and all the other things are also related to crude oil. So when the crude oil prices increase, it means the revenue that Canada is getting will also increase. So the demand for the Canadian dollar will increase, and it is positive for Canadian dollar. So normally in a geopolitical scenario, like uncertainty scenario, commodore currencies affect negatively because they are considered as risky assets. But if the geopolitical uncertainty impacts the oil prices in a positive way, it would impact Canadian dollar in a positive way, and for Australian dollar and New Zealand dollar, it is not that positive like Canadian dollar. So initially we catched a good short in AUD, but eventually with the rate hike momentum, I switched my view to bullish Australian dollar. Still my short-term view on Australia is bullish, so I'm considering entering to a long positions. I'm considering these retracements as kind of a general supply imbalance, balancing some imbalances. So I am not thinking that this is kind of a trend reversal for Australia, right? So my main trading pairs will be AUD and NZD. I will further look into Australian dollar, New Zealand dollar moving higher. So currently trading in extremely expensive zones, but I don't see any reason to short Australian dollar versus Kiwi. And this is a kind of a recap about the current geopolitical situation, and let's move forward. So what's the next point that I was planning to talk about? So I will take you through some general points, the key things that you should keep an eye on if you are trading based on fundamentals. So let's talk about the rate cut pricing probabilities. Fed now, like week ago, like previous month, we had a clear rate cut on June. Now there's kind of no signal of rate cuts in this year. But still, don't forget, Trump is pressuring the Fed to do a rate cut, but still Fed is an independent institute from the government. So if we get bad data for US, we will start to price a rate cut in US, and otherwise I don't think there will be a rate cut in the near future. European Central Bank, week ago we had hold, probably like most of the rate decisions were pricing a hold scenario, and now it's kind of shifted to a hike, which is good, because I'm emphasizing it as good is because euro was kind of in a cheap level for the last couple of weeks. But when talking about euro, still I have no clear catalyst to buy euro. For example, euro USD, I don't want to buy euro USD at this level, at these scenarios, because Let me grab report. This is a report from Mitsubishi Finance Group. So here is a very important point. The regression analysis we have conducted suggests that a 10% jump in crude oil prices would translate a 0.7% drop in Euro USD. So now this is 50% and it shows 3.5% drop in Euro USD. So still the fundamental outlook for Euro is bearish, because European Union is one of the one of the highest oil consuming zones in the world. So with the higher oil prices, the economic activity will also start to drop. So it would be the main outlook for the markets at the moment, that would run the price actions. So I will be little bit concerned buying Euro USD at these levels. And the other point is USD is getting the safe haven advantage also. And Euro CAD still the same reason. CAD is supported by the oil prices, and Euro CAD I don't see any reason to buy at these levels. If we see the war scenario is de-escalating, I will start to build up Euro CAD buy positions. Euro CHF is quite okay, because CHF is artificially weakened, like by interventions by the Swiss National Bank. So there might be some chance for Euro CHF to move higher, but still CHF also have the safe haven advantage. Euro GBP is quite good, but compared to GBP, Euro is the mostly affected currency with these oil prices. And also you should know that, like, DXY, DXY is the US dollar index. Let me get you that also. Let me get this thing. We had it. Wikipedia is here. So here, US dollar index is an index of the value of United States dollar relative to a basket of foreign currencies. Okay, so when seeing the weight of the currencies in this basket, it is kind of like interesting, because euro takes a 57.6 weight. So when DXY is performing well, that means, like, for pound it's something around 11.9% in weight. So if it's simple mathematics, if USD is performing well, it is more negatively affecting euro. So if we, I mean, like, not in an economic aspect. So if we see DXY is performing well, right, DXY performing well, it means, like, compared to GBP USD, Euro USD has more potential to go in a sell trend, like in a more number of pips. So keeping that in mind, I will consider Euro GBP as still in a sell trend scenario, right? And there's another point I will hop into that at the same time. So today we are having UK GDP estimation here, January report. So the forecast is, like, previous value was 0.1, GDP MOM was 0.1, and now it's forecast to 0.2. So this is kind of a more not a normal distribution. Like, most of the people are in a positive manner, like they are expecting pound, like UK, to have a positive GDP. I'm also kind of in that side. I will point out why I'm in that side also. So YOY, it's also point. Previously it was 0.7. Now almost all this is not an 100% projection. These are some views of major financial institutes, so we can't blindly rely on these forecasts. But still, I'm kind of agreeing these forecasts, right? So the reason why I stand with these forecasts is because of this. Let me show you that also, so you can also use these kind of tips in your trading. So all right, here we go. So for the last couple of months, like we have been seeing United Kingdom's PMIs showing some good performance since October, November, December, January, and February. It was a small drop, but still it is above 50. So as you know, like for those who don't know about PMI is like Purchasing Manager Index. We have two types of PMIs, manufacturing and services. Usually we give more weight for services PMI. I will bring it that also. So it was also good. November it was above 50. December also. October, like since last year April, it was above the 50. So for when considering PMI values, this point is for those who doesn't know about the PMI, like the back end about the PMI values. We have a threshold value of 50. So if the PMI values are above 50, we consider that economy is in an expansionary pace, which means the business sector, the service sector, manufacturing sector, all sectors are performing quite good, and it is positive for the currency also. So if we see, like, this is not a rule, this is what I have experienced for the last 4-5 years. So if we see 3 months PMI values, especially the months that included in a quarter, for example the quarter one is January, February, March. So if we see 3-month PMIs are giving above 50 values and keep increasing, we can kind of forecast that quarter GDP will come in and beat because you know GDP is a lagging indicator. It comes like 2-3 months later. So we can estimate, we can forecast that the specific quarter GDP will come positively if that specific 3 months PMIs are quite positive. So based on that experience, like it's not 100% accurate, but it's like 70 to 80% accurate. So with that experience and with that exposure, I also think this GDP will come in a positive way. So in case if we get a good beat, right, I will look into these kind of trades. I will I like initially I think there will be this kind of movement, all right, this kind of movement, but I will not short GBP. I will still look for longs in GBP. So I will look for Euro GBP shorts, right? Euro GBP shorts. This is not my entry point. I will wait for the data and the reactions. And the other thing, the best thing is GBP NZ is quite expensive for me to buy at this moment. Maybe I will wait for a good retracement and enter to a GBP NZ. And yeah, GBP JPY will also be a good trade opportunity. For these are very short term trades, maybe like 30 to 40 pips. I will book my profit and make that. If I'm going to hold the trades, I will for sure make the trades break even after moving 20 to 30 to 40 pips. You're so right. And Bank of England also, we have started seeing some rate hikes, but I am not pretty sure that they will move on to a rate hiking cycle, because it would really damage the economy now. As you know, like as UK is also having a very bad debt profile. So to overcome that profile, they will need to boost the business sector to increase their tax revenues and those kind of stuff to pay the debts. So with high, like interest rate hikes, it will be really difficult for the country, for the economy. So I will not be that much interested in UK's interest rate hikes at the moment, but if we get more data, then I will consider that also. Bank of Japan, with this oil market pressure, we might see some hikes. You know, this Bank of Japan, like people were expecting rate hikes since like last year, since they exceeded the negative interest rate policy, but the Bank of Japan is keeping their rates on hold, mainly because of the Takaishi's fiscal policy stance. So she's a political figure that focuses more on spendings, which is not supportive with the high interest rate hikes. So if, as you know, like the basic economic theory, when the interest rate is increased, people tend to start to save instead of spending. So if the inflation pressure and the oil pressure would affect the inflation, then we might see Japan start like maybe doing another interest rate hike. I'm not sure whether it will be a continuous hiking cycle, but we might see a chance. We might get a chance to see a couple of hikes in Bank of Japan also. So Swiss National Bank, we also see some interest rate hikes. This is all because of this war happening in the Middle East and the impact of oil prices on the inflation. So if we see some easing in the war, the entire scenario may shift back to the normal stages. So Bank of Canada, they also have started some, like people have started to see some rate hikes by the end of by October. The market is pricing, like the market participants are pricing a full rate hike in October. So we'll see mostly the oil price impact will affect starting from the next month. So starting from this month. So we'll see what will happen in the markets with this current scenario. So let's move on to the interesting part. So actually, I was expecting Bitcoin to follow S&P 500 for a sell trade, but it didn't perform as I wished. But still, my outlook is bearish on BTC. So I don't think there are any fundamental reasons to BTC to go further higher. So I will not long or short at these levels, because I'm not a fan of BTC and other cryptocurrencies. So general or VVs, I'm looking, my preferred direction for BT is in the sell side. So I'm looking at these 52,000 levels as a medium term targets. And equity markets, let me delete this messy chart. So initially this this week started with a gap, and that gap was filled because of Trump's comments. Like he gave some comments on war, easing of the war, but like it's not valid. I think it's just a kind of a tweet, maybe. So with that, we started seeing US equities, like all the equities, like when US equities start to fall, the other equity markets also start to follow the same trend. So, and one good point is like Japan. If this war scenario de-escalates, I will consider longing on Nikkei. So I had couple of trades in Nikkei, but like I was able to close these trades with some decent profit. Unfortunately, with the current war scenario, this up movement was fully recovered, but still my cards on this is in the bullish side. This was another trade based on the geopolitical tensions, so I took some profit. Like my profit level was triggered, like it was somewhere around these levels, but it was triggered at this level because of the gap opening. So we saw some easing in the volatility, but still it's kind of increasing, and it's also something that we should consider. And gold. So basically, with this war tension, people are looking into buy gold, but I don't think it's a good decision to buy gold at this level, because if the equity markets are heavily negatively affected by this war scenario, investors and big players will start to balance their portfolios by selling off their safe haven, like to balance their profit and losses by selling off their safe haven, especially gold and silver assets. So with that, we might see some sell movements in gold. So I'm considering like gold back to touch 5,000 and 4,900 800 levels. So let's see how the markets will impact, like markets will affect. And yeah, this is the kind of outlook about the markets from my end. This again, I'm reminding, this is just my point of view about the financial market, and this is how I plan to trade these events and trade in these risky markets. So I hope you will get some educational tips from these videos. So in case if you have any doubts about the fundamental points I was discussing, just reach out me in the comment section. I will hopefully reply to every problem, every question you have, and let's look forward into making some good videos in the future. So hope this would be interesting for all of you, and wish you a safe and happy trading. Always don't forget to manage your risk. So guys, so traders, wish you a profitable week, and see you in the next video.